Hello everyone, this is Evan here from the Trade Risk on Wednesday, April 26th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we got a lot to cover. Let's jump into the charts here with the S&P 500 first. SPY ETF finished down 11 pennies today. That's minus 0.05%. And that was after we were up nice and green on the day earlier in the session. That ultimately reversed and we closed near the lows. And before we talk about that, let's dial it back, take a look at that weekly time frame. And if we go to that weekly chart here, you can see the developments this week and the price structural breakout that we saw. Notice over the past, really since March 3rd, this candle right here was where we sort of topped out at these prior highs around 240, and we've been kind of pulling back, moving sideways, consolidating in this range, and this week we are breaking this trend line which extended from the highs here, and we're starting to charge back and retest those prior all-time highs. So some nice bullish developments there happening on the weekly time frame, on those long-term time frames. Trend, of course, is higher. Now, if we go back to the daily chart and take a look at what happened here, it was all on Monday. Monday was, of course, the day following up the weekend elections over in France, and markets responding favorably to that outcome, to that round one outcome. And we saw the VIX get crushed. We saw markets open up with about a 1% gap higher on Monday, and we continued this charge throughout basically the rest of this week. If we go to the cash market on the S&P 500, you can see it was this kind of dual inflection point, and we talked about it in our weekend video right here, where we really needed to see the market make up its mind here. We wanted to see a thrust away on the upside or the downside, and really get some convincing sort of directional price action. And you know, we asked and we got it because we of course started that gap higher to start the week, and that sort of kicked off this move to the upside that we're seeing. So we left behind this inflection point. Bulls got the job done on Monday, finished up 1%, and then notice we had another gap up here yesterday on Tuesday. So if you take a look at this chart, we really have these two sort of potentially breakaway gaps here. Again, anything can happen. We can come back and fill this tomorrow, and that will be proven not to be the case. But it's one of those situations where you look back at a chart in 3 months or 4 or 5 months, and you say, wow, how did I miss that? And it's those, it's this type of very fast sort of price action here that is developing. Now, let's not sound too optimistic. There are some things of concern. If we go to, if we were to throw Bollinger Bands on here, we know we're short-term overbought. We're above the upper Bollinger Band. That is the case in all of the major averages. Now, again, that generally does occur at moments of momentum and strength. So some people would like to ignore that. That's perfectly reasonable. But the real sort of question that I think we need to ask ourselves now, or at least certainly something I'm asking myself, is this going to be a continuation pattern? So is this weekly chart going to turn into just a nice, clean continuation pattern, trend continuation to the upside? Or are we going to develop in a longer term range here? Are we going to fail at these highs, sort of indicative of what today's price action looked like? Are we going to fail at these prior 240 SPY level highs? And are we going to, start to work ourselves into a longer term range, something like the IWM, like it just went through? I mean, this was 20 weeks going sideways here. Is that what the S&P is going to start to do? That's the question that you really sort of need to ask yourself or think about heading into the end of this week and into May. So as it stands right now, it's really tough to be a bear just with all the developments we're seeing here. Price action, trend, momentum, everything pointing to the upside. Breadth still supportive. So there's a lot of things to like. There are some catalysts. There's headwinds. There always are. But we have the tax bill that we need to kind of stuff through. We got the government shutdown, the budget policies. We got another vote in France. We got earnings still amidst the season right now, and with plenty of big cap tech influential companies to report. So there's a lot of things that could derail this rally, that could get us to stall out here at prior highs. But for now, momentum, trend, everything kind of pointing to the upside. So for me, wouldn't really want to be fighting it, but I would be respecting at least this prior level here of 240, respecting the short-term overbought conditions, so on and so forth. The IWM certainly is what probably is the most bullish breakout and happening here this week. 2.75% to the upside so far, and then take a look at what this chart looks like here. After almost 20 weeks of going sideways, going nowhere in the IWM, we're starting to see a very sharp move higher above this long drawn out range. That is very bullish if this price can hold, if this breakout can actually hold. I put out a post today just detailing some quick thoughts on it. And, for me, I'd like to see the weekly chart. I want to see a weekly close above, ideally as close to the highs as possible, but 140 plus, 141 plus. If we can get a weekly close for the IWM above that level, that's certainly going to get the attention of a lot of longer term participants and that longer term time frame. That just bodes well generally for risk appetite in the U.S. market. So IWM weekly chart, some very, very bullish developments there. If we go to the daily chart, look at those open gaps that we talked about in the SPY. They're even bigger here in the IWM, right? So showing a lot of pent up urgency here, and it'd be interesting to see if we can hold on to that and just continue to sort of plow higher here in the Russell 2000. And then finally, NASDAQ 100 at all-time highs as well here. Again, stalling out in the short term to get those open gaps, and it's really just sort of accelerated higher, continues to be pretty much the leader here in the Qs. So that is the wrap up. Lots of bullish development, short-term overbought. It could lead to a little bit of a pullback. Would not be the end of the world, but again, I think the bigger picture here is, does this all turn into a big continuation pattern, or is this going to turn into, particularly in the SPY, really is what I'm talking about, considering that's the only major here besides the Dow, that hasn't broken out to all-time highs. So will we start to see more more of a reversal here at those highs? That's the question. So with that, let's get into some other markets here. TLT will start there. Actually looking pretty actionable today. I was looking at this for a potential trade, decided to pass on it, but you get a nice kind of pullback retest of this prior breakout level here. So this multi-month channel that we broke out from, the sideways range, we're testing it now. We saw a nice kind of open on the lows and then rally into the close there, finishing strong on the day, 0.5% to the upside. Something interesting if you guys like those breakout retests, something to consider, and you have a pretty clear stop out point. We'll go to the metals next because gold reminds me of that same kind of trade. We've been moving higher here in GLD, and over the past week or so of trading, we've pulled back to that 20 period. We saw a little bit of a reversal today. Also looks interesting for a pullback trade, something I was considering as well, but it once again passed on. Volume profile here on gold looks pretty nice over the past couple of weeks or so. Nice uptick in that buy volume, so something to consider. Silver, on the other hand, not so much. This is starting to pick up here on the sell volume, and it's starting to really thrust off of these old highs here and come back into this old range. So much messier. Again, you could still kind of make the case for this inverted head and shoulders pattern if as long as we hold above $16. But again, that's a big pattern. That's something you could be waiting for a couple more months to really fill out. So just be aware of that. But silver certainly losing a little bit of momentum here. If we go to the oil trade next, down 1% today. We were rallying earlier in the day, but clearly had kind of given that back and closed near the lows. A little bit of a reversal there, just like we saw in the equity markets. So USO, still has me concerned. Momentum to the downside. Trend was broken, and we're coming back to those lows here. So I don't particularly like oil that much. We'll have to see how it acts around $10. Doesn't really matter what I think about it. We'll have to see how the market responds to these prior lows here in March, but something I would not personally want to really get in front. And natural gas, not too much of an opinion on it. It's kind of just it had a nice session today, up almost 3%, had this nice gap that kind of held in. If we saw another move like this tomorrow, I think that's definitely constructive. If we can start to get back above some of this recent consolidation here, above like 760, 770, I think that would bode well for the short term. But for now, really doesn't look terribly actionable to me one way or the other. So that is, those are some of the other majors. Let's look at some sectors. XLY really just off to the races. We did highlight this in our last week video, but this sector just getting a lot of rotation, a lot of love here. 0.5% to the upside, outperformed today, fade off the highs, but still in a strong trend. Overbought, but trend is there, and certainly some strength there. XLK also technology. This makes sense, right? Just like the Qs. acting well and continuing to be a leader. Materials recently breaking out here of this nice range. It's pretty actionable. Nice little uptick in volume over the past 2 days, getting above $53. We'll see if it can hold there. It's kind of got those breakaway gaps, just like we pointed out in the indices. And then XLI also working, retesting the highs here, not clearly, running away to all-time highs like those prior three, like the materials and technology and the discretionary sector. Industrials, potentially a little bit of a range bound here, but still picked up some nice momentum recently. Healthcare, talked about this one for a while, breaking back above $74, $75. That looks pretty constructive. So lots of things starting to work here. Financials thrusting off $23. We talked about this being, very high stakes, high looked at area. Generally has a lot of trickery. Well, one way to defeat that is to just kind of gap away and run away from this level. And bulls so far getting it done. You could certainly still see the outlines here of potentially a head and shoulders pattern if we start to, fail at $24. So we'll have to keep that in mind. Weekly chart, you can see still holding really right where it needs to hold. Uptick in volume though is notable there on the sell side, but let's see if it can continue to hold going forward. Lots of those financials seeing a nice move this week. And then on the downside, really just energy that has really started to sort of underperform or continue to underperform. It's been underperforming for a while now, but after losing that $70 level, breaking this trend and this kind of recent thrust up here from mid-March or so and giving that all back, just not that interesting, especially with oil in a sort of a vulnerable spot. Now, you can make the case, of course, that we did kind of double bottom here. We undercut the lows from the 27th of March, and now we're starting to work ourselves higher. That's possible, certainly can be the case. If we start to, again, move back above $69, $70, I think that's a lot more interesting. But for now, it's just underperforming and not really a sector that's interesting to me. And then finally, we'll look at utilities, which, they continue to just kind of hang out here, minus 0.31% on the day, but you can see this base, winding up pretty tight or kind of, crimping up to the top end of it here. Still reluctant to break over $52. If we start to see, TLT maybe catch a bid again, maybe XLE will start to go, but something to pay attention to. A lot of those individual components have been in some trends that have been working. A little more of a boring sector, but pays the bills nonetheless if you're holding some of those things that are grinding out new highs day after day. So with that, I think we'll end it there. I hope everybody's doing well out there. If you guys liked the video, first time watching, make sure you subscribe to our YouTube channel. Otherwise, thank you so much and talk to you again soon.